and welcome to the 23rd Leadership Levers Lectures by Amit Malik, who is a CEO and Managing Director of Aviva Life Insurance India Limited. And I'm sure quite a few of you, or maybe most of you, would have visited his LinkedIn profile. And one thing that comes across as he's one of the most sought after, panel speaker, and also, the inaugural speaker for various events, definitely in the financial services, and most importantly in the financial services industry space, also the insurance industry and insurance sector. His views are most sought after, not just within the community, the table. And he has 23 years of experience, right? And having started with, GlaxoSmithKline Consumer Healthcare as Deputy Manager HR. And then he went on to work for, rest of it is all financial services. And then next one was with American Express as working as the manager between April 2003 and August 2007. And then he worked with ABN AMRO Bank in two different capacities. One is a Vice President HR, other one is Vice President HR Business Partner. And that was for almost, I think, 3 years and 1 month there. And after that, he had a long stint in Vice President HR Business Partner and Consumer Card Operations, as well as processing centers. And then rest of it is all with the current company in different avatars, and that is with Aviva Life Insurance Company India Company Limited. And firstly, between 2012, December 2012 and December 2020, he was the Chief of People Officer for Aviva India Life Insurance Company, and then also as the Chief People Operations and Customer Services Officer at Aviva Life Insurance Company India Limited. And currently, he is, like I said, he is the Chief Executive Officer and Managing Director of this company, where he has been mantling this role from January 2021. And let's all give him a good luck and best wishes for his remaining innings. Like I said, he's going to talk to us about the three avatars, or let's say industry. In life, the insurance industry, 1.1, 1.2, 1.3, and also the kind of digital metamorphosization that is happening across the country, thanks to largely to
Hello. I think we lost Dr. Chaudhary, or did my connection go wrong?
I think there's a network issue, Mr. Amit. No problem. So I think moving ahead, open this here. Okay. So I think, Mr. Amit, we can move ahead and maybe, we can hand over the floor to you.
Thank you, Nandita. Thank you, Dr. Chaudhary, for the kind words and the introduction. Namaste, everyone. This is Amit Malik here, and thank you for joining in on a Saturday evening. I'm sure all of you would have had something to do at home with your family, friends, relatives, but taking time out to listen to me, I'm really humbled and obliged. And thank you for your time. I hope to add value and give you something to go back after an hour. And I promise I'll keep it short so that we can all go and have a fun evening with our friends and families. Like Dr. Chaudhary said, I work for an insurance company, and I'm going to use this opportunity to kind of do an education series on insurance, different types of insurance, and how digital is playing a role. But before we go there, I wanted to talk about something, and I'm being very provocative here, is that, in India, the couple of things that we don't talk around as a family, and one of them is finances and financial planning. We don't talk to our families and share about how, as an individual, we are doing our financial planning, where have we invested in, what is the return on investments. We very shy away from talking about that. But if you look at our own self, and I was reflecting on it when my sister's kids were here, some time back to spend their summer vacation. that actually in our saving is a part of our culture, and it's been there. If you remember all of us visiting our grandfathers and the grandparents in those, back days when we were growing up, and and when we had those summer vacations and you went and all of your cousins were together and there was fun about food and games and all of us staying in one house, sleeping wherever we could find place. But that is when, the relatives visited and they gave you small money. And I think that's where, from an Indian family standpoint, the culture of saving started. Some of our parents took the money, most of us, and then kept it for, saved it for us. And then one fine day they would say, there is so much money, why don't you go spend something or buy something and buy something for us? Or the culture of piggy bank, or gullak as we used to call it. I don't know across India how would you say that, but gullak, which is very, very famous in north and western part of the India, that was there. So if you look at that whole piece, it was their own indication of telling us and teaching us to save early on in our lives, right? And we have grown with that. And I think that is the first step towards any of the financial planning that one can have. It is about when you begin. And there is no right time or a wrong time to begin financial planning. If you have not done it, do it today. If you are young and you want to do it, don't wait for anything else. Do it today. So whenever you start to earn or whenever you have some money to save, that's when you should start doing. And that's the culture that, you should inculcate. I'm sure all of you, as I understand, most of you are working professionals. Many of you would have had kids. Many of you will be planning to have kids or start a family. So as I say, there is no right time to start financial planning. And financial planning has various elements. There is banks, there is mutual funds, there is equity stocks, there is gold, and then there is insurance, right? And I think it's important for us to understand each and every one of them and focus on each and every one of them, because your portfolio should ideally be diversified and should have elements of all. That is how you do prudent and good financial planning. I will only touch about insurance, but I think it's important for you to make sure that you are diversified and you have everything in your portfolio. So when you go back or you sit with your financial planner, bank representative, your CA, your spouse, whoever helps you plan, make sure that your portfolio has all elements of what I mentioned, and insurance is one of them. Before I come on to insurance, or before I come on the importance of insurance, I just thought, I'll take you a little into the history of how insurance started. I don't know how many of you are aware, but the history of insurance started, it goes way back many centuries. It actually finds mentions in the writings of Manu, if you have read Manusmriti or Dharma Shastra or Kautilya and Arthashastra. So it is that old as a concept. And when I talk about that, you will not find the term insurance there, but you will surely find the concept which was propagated of saying people should pool their resources so that they could be redistributed in the times of fire, flood, epidemics, and famine, which were very, very common in that days. So I see that as a precursor to modern day insurance. Right? So someone like me who loves reading history, ancient history, it was very, very interesting for me to have found out these references. Even if you look at the Western history, you will have, or Indian history at that time, you will have marine trade loans, or sea, because of the sea routes and the trade was via sea, or the carriers contracts. Those were all forms of insurance, and that's how it started. In India, officially, the insurance is supposed to have started with the establishment of Orient Life Insurance Company in Calcutta. That was in 1880. So it is not a new concept. It's been with us. Yes, the company, however, failed and had its own history. And then in 1829, we had a company in Madras, which was a Madras presidency at that time. That's how it started. The government officially started insurance in 1914. Right, and the Insurance Act came in 1950, which abolished all principal agencies, and that's when in 1956 we had LIC, which came in as the life insurance company, which came in existence. So that's just a brief 2-minute preview to you on the insurance industry. LIC had a monopoly on life insurance till 1990s, when the insurance sector was opened to private sector. The first ownership was at 26%. Then when the BJP government came in 2014, they increased it to 49%. And in the budget in 2021, the Honorable Finance Minister took the private sector ownership to 74%. What does that mean is that 74% ownership for a foreign company. So like Aviva and Dabur, we are joint ventures between Aviva and Dabur India, where Aviva is the foreign shareholder and Dabur is the India shareholder. So a foreign shareholder can now have 74% stake in an insurance company. That's what the regulation means for us. Just to give you a market landscape, there are a total of 57 insurance companies in India today, out of which 24 focus on life insurance and the remaining 33 are non-life insurance. So you cannot have a same company giving both life insurance and non-life insurance, right? And sorry if some of you know and you work in the insurance industry, it might be boring for you, but I just thought I'll share the context with everyone else so that people do understand. Now, as I talk about life insurance and non-life insurance, both are regulated by an insurance regulator. So just like banking has an RBI and mutual funds have a regulator, insurance also has a regulator, which is called the IRDAI. It is based out of Hyderabad, and it is the custodian of all customer rights in insurance. Both life insurance and general insurance are governed by that. Life insurance companies like ours offer coverage to the life of the people, whereas general insurance companies offer coverage to day-to-day things like vehicles, homes, travel, industrial equipment, and now health. So the new IRDA chairman has asked this question, saying why life insurance companies cannot do health. But currently, general insurance companies can do health. Life insurance companies can only have health riders. And what are riders? Riders are the products that you pay additional for and use with the principal policy. So that's what riders are. Life insurance companies in India, which are 27, have really evolved to give different products. Before I joined the insurance industry in 2012, I was very confused about the life insurance products. So you have to understand that we are a very highly regulated sector, and we are also known to be very complex, right? And I remember a study done by Hydrix, I think in 2015 or 2016, where they said that life insurance companies globally are far more complicated than NASA. So, and at that time we had a good laugh being from the industry, but that was a fact, that, we are so highly regulated and complicated. So for some of you who don't understand the life insurance products, let me just give you a one-line definition about what the products are. The first and foremost is what we call a protection product or a term insurance. It is the simplest and it is considered to be the cheapest, right? It's a pure cover plan which offers protection for a specified time period. It's very simple. You go, an insurance company calls you and says, sir, we will give you a 1 crore cover if you are at the age of 35, you don't smoke, you don't drink, whatever. We'll come at X rate, let's say 20,000 for the sake of saying 20,000 rupees. You pay 20,000 rupees every year for the next, say, 30 years, 35 years, 40 years. And if something happens to you, we'll give your family 1 crore rupees. If nothing happens to you, sir, we keep the money and you sleep well and peacefully for the next 30, 35, 40 years that your family has got. That's the term plan. And now a lot of people question saying, why should I buy term plan? Because if nothing happens to me, the money goes to the insurance company and nothing comes back. And as we joke in insurance, they are the people who typically are called Amar and who think that nothing will ever happen to them. But that's a question that everyone has. So for those people who have that question and will not take insurance cover, there is also a plan called term with return on premium. Now it's just like a simple term plan which offers protection, but it's a little expensive. Because here, what we say is that if nothing happens to you in the earlier example, we will give you back the premium that you have paid. So if you have paid 20,000 rupees for 20 years, I'm sure all of you maths whiz would do the calculation. So, whatever that amount is of the premium, we will give back to you after 20 years. If nothing happens to you, if something happens to you, then you have the cover. So that's the difference between term with policy and term with premium and a pure play protection plan. There's also a whole life insurance cover, which, a lot of companies give, where people say that, we'll give you a cover up to 100 years or your death. So that's different plans, and I'm not going to go into that. That's what is called the protection piece of life insurance. My own suggestion, if you don't have one, you should go and buy one, and just buy a plain vanilla term plan, which is very, very important for each and every one of us to have. Right? And that was one of the first plans I had, even when I had not joined. It's very simple to understand. It's very easy, and you should go ahead. The second is an endowment type. Now, when you talk to an insurance agent, they will say, sir, do you want term? Ma'am, do you want endowment? Do you want savings? Do you want retirement? Endowment policies are that which provide a combination of life insurance and saving. So what they do is they cover your life during the policy term. They also help in saving money regularly, and you get a lump sum at the end of the maturity or regular intervals through. I can see someone who has said, can you please tell me what is this session all about in the chat box? Vaibhav, the session is about insurance. If that interests you, you can join it. Then there are insurance types where you have a child plan, which is on child's financial planning need as the child grows. There's also a retirement plan, which focuses on providing financial security post-retirement to you. In a market like India, where we do not have social security like the West, it is very, very important for you to save for your retirement. And I'm not saying the only way to save is from an insurance plan. You should save for your retirement through various means that are available, whether it is FDs, gold, mutual funds, but retirement insurance plan is a very good option for you to choose from and can help you create a stable earning and a regular income stream as you retire beyond the age of whichever you decide. Some want to retire at 45, some want to retire at 55, some want to retire at 60. I think the other question that a lot of people ask on insurance is, what is ULIPs? ULIPs are very, very popular. They are linked to market linked funds. That's how we do, which includes equity, debt, and the combination. As a policy holder, you can decide what is the combination that you want to use. Most of the products are flexible and they give that option. They are very, very flexible instruments and investors can switch. So they are also linked to the market. So, if you want to invest, if you are not the equity type and you don't want to take risk, you can invest in a ULIP plan, and as the market progresses, you can get that. And it also falls under the long-term capital gains. So I think just wanted to share with you that, these are the plans. Now, each and every company can offer these plans depending on their different products, right? But the sense is the same. Government has also now, in the last few years, tried to provide insurance to individuals. I always say this, that there is a big Bharat outside of India. So we live in an India which has an India and which has a Bharat, right? And for the people who are, not in the metros or tier 1 or tier 2s, or even some there is also a government who's provided standard policies like Saral Jeevan Bima, Saral Pension, Pradhan Mantri Suraksha Bima Yojana, or Pradhan Mantri Jeevan Jyoti Yojana. Those are the plans which the regulator decides what would be the premium, what would be the benefits. We as insurers just add our name and then sell them to largely the Bharat where, which is on penetration. And I will come to the penetration of insurance in India and why we need to do that. That's just to give you a quick flavor about what the whole thing was. Some of the regulatory changes, like I told you, which has done from the shareholding perspective. The regulator is also, let me tell you, it's a regulator that keeps the customer right at the center of everything that they do. It is a very customer-focused regulator, which is very, very good. And as a customer, I think it takes, when COVID happened, they immediately said death due to pandemic is covered under life insurance policy. So irrespective of whether the policy had that term or not, they included it as a regulator, which was good. The regulator is also, while we are talking about digital, and let me give you an example here. Earlier, if you were to do medical, you would have to go to a medical center and do all of that. Today, that can happen via teleconsultation, telemedical, screening over a tele-video call, and that's where the regulator has, allowed us to use those means to be able to do that, which is very, very good. Just like, the regulator has also helped us to get new customers through eKYC. With the introduction of eKYC, the customers are not required to submit physical copies of their documents. So the KYC process saves time. It is also focused on, using the technology and the digital interface to be able to do KYC. Again, OTP. We are also used to having OTPs on our bank transactions, on our debit cards and credit cards. You can also now do the same from an insurance standpoint. Another step that you can do is, if you don't want a physical copy of your insurance, you can also get a digital copy, digital policy document. You just have to choose at the time of filling the form. My request to all of you is, if you buy insurance, please make sure that you read the form very, very carefully. Please make sure that you fill the form yourself. Please make sure that whatever declarations you give are true and honest. It will really, really help you and your families at the time of settling of the claim. Any information that is withheld or wrong can have an impact on the claim settlement ratio. And if you was to buy an insurance today, when you check out the insurer, please check out their claim settlement ratio. Please look at how many claims out of 100 do they settle. All of us as insurers have improved our claim settlement ratio. There is a huge focus on settling claims. Because why do you buy insurance? You buy insurance because at the time of need, whether you are there or not there, or your family, your need is taken care of. You are buying insurance to hedge your risk. We are taking away your risk as an insurance company and saying, Mr. or ma'am, give us your risk and you pay us premium for that. So make sure that you do that very, very well. I think the DigiLocker, like I said about digital policy, all of that has been very, very good. I think the government is very focused on in bringing in technology, and eKYC, DigiLocker policy documents are going to happen. If you look at the market size, this has been this question about India being such a potential. We are, over 1 billion people. But if you look at insurance sector, historically, the growth over the last 5-6 years has been 12 to 15%. That's how the sector has grown. But the penetration of the sector is, roughly has always remained between 3.65 to 3.75. That's the penetration. Because 2/3 of the policies actually lapse after in a period between anywhere between 8 to 10 years. That means only 33% of the people actually renew their policy and go through the full policy term, which is unfortunate. But that is something that, as awareness grows, people should. If you buy an insurance, buy it for the, see it to the end, and that's when the benefit comes in, whether it's an endowment plan, whether it's a ULIP policy. I think if you look at the gap between insurance density and penetration level for the average Indian, it is very, very high, right? In FY 2022, life insurance company has recorded a growth rate of 5.8% compared to 1% last year. So which is very, very good. And in our life insurance, LIC is the behemoth who has 65% of the total market share, and it continues to dominate the sector. If you are looking for an employment in the sector, then let me tell you, this is in life insurance industry is expected to grow at a CAGR of 14 to 15% and reach a value of 12.4 trillion. So if you have the skill sets, this is a good sector to seek employment in. Let me also tell that to you, right? And it is there. If you look at, insurance's growth and evolution, the insurance 1.0 era was, as I say, from 1956 to 2000, when there was an LIC monopoly. I think insurance 2.0 was for the last 15 years, where I think insurers rolled out customized insurance products through digital insurance, policy aggregator platforms, insurance specific technologies of, a lot of technology is used in insurance, from a risk assessment, claim, customer care also, which is the back end of insurance, but a lot of customers don't understand. So when we talk about technology and we talk about digital insurance, a lot of that goes in customer servicing, a lot of that goes in claim settlement. For us at Aviva, we have a 24-hour, we have a fully manual, fully digital claim process where there is nothing manual, and a lot of insurance companies have that. A lot of technology goes in assessing risk, underwriting, auto underwriting. Right? I think that's important. If you were to look at insurance 3.0, which is a digital insurance, I think the focus is going to be on people, on technology, and on market boundaries. There is a surge in insurtech companies and fintech companies who are entering the market and also helping us increase the penetration. And this is a lot of this is on, they are taking small bits or about the insurance process, and they are trying to digitalize the experience. They are trying to digitalize the service, digitalize the products, and make the best of new technologies. If you look at IoT, insurers have started IoT-based services that integrate mobile applications with wearable devices. So if you were to ask me, and I don't know if you understand, in insurance, underwriting is a very big concept. When you apply for an insurance, we underwrite you from a health perspective, and we underwrite you from a financial perspective, that whether you will be able to pay the premium that you have promised us to pay for the length of the policy. Today the health underwriting typically happens on the medical tests and the medical records that you go through. I think if you look at digital and future, we will have to integrate the data from the wearables to the underwriting process. So let me tell you, if you are someone who is, let's say, a borderline diabetic, and if you are a borderline diabetic, when we do your underwriting, you will tell us that, Mr. Insurer, I'm a borderline diabetic, but I have been a borderline diabetic for the last 5 years. You look at my health data, you look at the number of steps that I take, you look at my sugar consumption, you look at my health, you look at the exercise that I do, you look at my physical health record, and then do an underwriting, and then tell me what premium I should pay. I think that's where technology, wearables, the new devices are going to come in. And it is a big market. If you look at S&P Global Market Intelligence data, you will be surprised to know that India is the second largest insurance technology market in Asia Pacific. We account for 35% of the investments made in technology in the world in India. Right? I think, so if you look at, and I'm talking about life, if you look at general insurance, I think proactive insurers are going to look at health data, wearables, they are going to look at mobility, smart housing, all of that connected with big data, IoT technologies. These will provide new services and products that will delight the customer. Wearables, biosensors, health devices, mobile apps, all of this product to track customer behavior, identify a kind of care needed. I'll give you an example from general insurance. Aviva in UK has a product where, you and your family members download a game. Every time you drive a car, you are rated on that mobile app on your skills of driving, right? Within the family. So it's a game. Who is rated? Who is on the leaderboard? You do this for 1 year, and next year when you come to us for your car insurance premium, depending on how you have driven for 1 year, we will know, are you a high-risk driver or a low-risk driver? Depending on your risk assessment, you will get a premium which is as per your risk. So if you are a low-risk driver, you'll get a premium which is lower. And if you are a high-risk driver, you will get a premium which is higher, and you can still have that whole, between your friends and family, and have that as a competition. So look at how technology helps us in assessing the risk assessment. There were times, well, now we have technology, but I'll also tell you a story about an insurance. There were times when insurance companies would look at the color of your car and then decide what your risk profile should be. This was way back in 60s and 50s and 60s. If you bought an open top car with red in color, and if you were 25 or 35 years of age, you immediately shot up high on the risk assessment portfolio of the companies at that time. I'm not saying it happens today. I'm just giving you an example. To today, technology telling you exactly not to look at the color of the car, not to look at the age of the driver, not to look at the type of the car, but to look at the driving skills of the car and then assess the premium. So that is how technology has been able to influence the change over the last 10, 15 years in the insurance industry. We have so you will see a lot of technology play happening in health insurance. You will see a lot of technology play happening in general insurance from a customer standpoint. In life insurance, a lot of it happens at the back end, not so much at the front end. But what will drive the insurance sector? And I know someone has written a question which popped up on my screen saying, do you have jobs and do we take candidates from other sectors? So let me tell you what will drive the insurance sector, right? I think the first and the foremost is about customer centricity. Customer experience, simplification of the journey, the product modernization are the key themes that are adopted by insurance companies. How do we look at seamless omni-channel experience for the customer? Now, when we talk about buying online in a life insurance space is a combination of online processes and offline processes. It is typically, a lot of it is assisted online sales. But as an insurer, what we try and do is, if there are 7 steps in the process, and if you do 4 steps online, and for the 5th step, you have to go offline, we try and assist you to minimize the 5th and the 6th step and get you back on the online journey for the 7th step. That how we minimize the assisted sales is the challenge for us. And that is very, very important for us to be able to manage the experiences that are there. The second is about products and ecosystem. If you look at it, ecosystem as a strategy has been gaining traction in both life insurance and non-life insurance space. There are tie-ups with e-commerce, there are tie-ups with health techs, there are tie-ups with logistics. These are further going to bring in traction and involvement of technology in the insurance. So I think all of us in insurance industry has to look at the ecosystem. The second is the product. I personally feel that hyper personalization of products is going to be very, very important, right? Which is on-demand insurance, event-based insurance, cover for purchases that would gain prominence. I think that would happen. People would ask for saying, I'm only going to travel to this country, for this specific time. Can you give me a life insurance cover only for this duration? Those products. Or if this is my need, how would you look at insurance? I think digital commerce, that's another element which would witness increased adoption by insurers, digital marketing channels to acquire. So I'll give you an example. If 10 years back you were to hire a marketing head in an insurance company, the brief to the headhunter or a search partner would have been, I want somebody who understands print, who understands media, who understands TV, but should also have some knowledge of digital marketing. Today, if we were to hire for that role as the chief marketing officer, the brief would be entirely opposite. Today, we would say, we want someone who is a recognized digital marketing leader in the country. That person should have some knowledge of print, some of media, and other traditional channels, but purely digital. Because that's where the customers are. The customers are on the Instagrams and the Twitters and the Facebooks and the cohorts of such, a discard, or wherever. So, you would want to understand the impact of communicating. How do you communicate in an Insta post to a customer who is there? That is very different from how do you give a newspaper full page ad, right? Which a lot of people read, don't read, see, don't see. I think that's how the skills have changed, just to give you a flavor of the skills that you would need. The other is, I think, big data. Key enabler for insurance companies going forward would be the big data solutions, which is cloud computing, artificial intelligence, and machine learning. Now, if you look at AI and ML, these are the algorithms which get refined with usage. So the more test case you put in, the more knowledge they gather from there, the more data they are able to throw. Thus, the more we use them, the more improved would be the analytical capabilities to drive in-house development or tie-ups with technology companies that give data usage. This is highly, highly used in underwriting, like I've already shared, in claims management, in renewal, and also helps us to manage frauds. Let me tell you, we are an industry where frauds are very, very rampant. And AI and ML help us catch frauds. Because if I pay a wrong claim, I'm impacting all other policyholders because it goes from the policyholders. I think the new age data sources are also enabled by account aggregators framework, national health mission that the government is going to push for. You will see a lot of blockchain would result in a similar number of cases that are there. The other technology piece that impacts the insurance companies is payments. There has been a disruption in the payment space, which impacts the insurance industry also. If you look at India today, UPI payment, India is a test case of success of UPI payments, which the world is now imbibing. So digital modes of payment and settlement, and these help us increase insurance penetration in tier 3, tier 4, tier 5, tier 6 cities, where mobile has reached, telecom has reached, data has reached. So can we, we use those payment mechanisms. So I think those were the couple of things that, that I wanted to focus on what would drive. Now, let me give you an example. 10 years ago, if you were visiting Mumbai with your friend, girlfriend, wife, parents, you would have rented a hotel room traditionally and hailed a yellow and a black cab. Today, the same you with your friends has wider set of options to choose from. You would go to an Airbnb, you would go to vacation rentals, you would go to Aviva. You wouldn't rent a black and a yellow cab. You would most probably rent an Uber and an Ola for the ride. These companies have become household names, right? And what do they tell us? They tell us that our economy has moved to a sharing economy. This phenomena of sharing assets is not only in the urban India, but it has also gone to the rural India. And I don't know how many of you know, but there is a company called Tringo, which is a sharing platform which allows farmers to rent agriculture equipment and share. Farmers can book their equipment through smartphones or Dringo call centers. They have agents who are fluent in local languages and who can share. Now, by providing such platforms, whether it is Tringo, Uber, Airbnb, I think there is a floodgate of opportunities that has opened for people to have additional income and recast their career path. But these opportunities also come with their own set of risks. Now, as insurance companies, we have to make sure how do we be a part of this sharing economy? How do we provide insurance policies for homeowners, renters, for personal vehicles, for commercial activity? If you have rented out your personal vehicle to the others, I think those are the challenges where technology is going to help us find a solution. How do we cover the losses? Who all should be covered? All of that piece is very, very important, both from a life insurance, general insurance standpoint, and how do we protect you, my dear consumer, from the uncertainty. So the new technologies today need is to mirror this sharing economy products, understand the risks, understand the change, be agile, and then provide a solution. It cannot be a high-cost traditional solution, but it has to be a nimble, agile solution, which is based on IoT, which is based on advanced analytics, which is based on machine learning. This is where the insurance companies are going to better target and price for their users in the future. So just to give an example, Airbnb has partnered with Lloyd's of London to provide a host insurance program that extends the coverage to Airbnb hosts and landlords and traditional players. So I think this is where the future would be. Both the insurance companies and the sharing economy platforms would have to come together to collaborate and give a very, very seamless experience to the customers. I think the other key important point for private companies to go in is, while they're always being focusing on, penetration, I think the penetration can also increase in a way of how do we increase the digital penetration and offline agents. I think that's important. Online insurance sellers, there are many, Policy Bazaar, Insurance Dekho, are today the second most preferred channel than the agent channel which is there. Then comes the insurance direct website, which is roughly around, which is at number 3. And then the other means. So I think that's very, very important for you to understand how the landscape is changing. So if you look at insurance intermediaries, if you look at insurance aggregators, which provide general, health, and life, they have taken a large chunk of market share, which is very good. And then they are able to also provide the customer with the choice and the choice and various options to buy, which is good, and which has also kind of provided a big challenge for the traditional dominant models that have dominated, whether you buy through a bank or you buy through an agent. So I think that is where it is very, very important. If I was to, now I've spoken about AI, I've spoken about ML, I've spoken about insurance and risk, and I'm very cognizant of time, Dr. Chaudhary. So I will just talk about what are the challenges that are faced in going digital. We've talked about the benefits of digital. I think first and the foremost challenge that is there is the mindset and the confidence. People are more willing today than before to do what they can do digitally. But it's also about the education. When we had COVID as a life insurance company, we realized that there are 2 factors to digital. One is to provide our customers the platforms to be able to pay or buy insurance digitally. The second is also to educate them and give them confidence in this world of cybersecurity that nothing will go wrong. There will be no fraud. There will be, it is safe. And we had to actually educate them how to use and also assure them of the safety of the channel. So, that's where you take the trust to a different level, saying, trust us to pay via net banking. Trust us when we say that this payment is secure. Trust us when we say that your data will not be misused and you will benefit out. The second challenge that I see, for people to go digital is lack of expertise. I think there is a talent that you need, and insurance industry is not that, flamboyant go-to industry for the tech talent that is there. And that is where the insurers need to be very, very cognizant. We need to become our own disruptors and hire and promote and provide a growing opportunity for the talent that comes in, which is agile, which is tech. So, if you ask any tech person, which industry would you want to work on? I'm sure insurance would be 9th or 10th in his or her preference, going by my experience. And that is where, as an industry, that talent shortage is hurting us. So if you are a tech person listening to us, make sure that, you put insurance high up on your list. Last but not the least is need for simplicity. If you have to be digital, you have to have simple products that are simple in structure, products that are self-help, products that that are easy for the customer to understand and then buy them. Right. So that is where it is very, very important for us to look at how digital plays. I'll end up with a small story that I always share. There is a girl called Sia, right? She is to be born. Now, Sia is in her mother's womb today. Sia's parents went to a gene lab. They both did a compatibility test. Once they did a compatibility test, they decided to get married and have Sia. Even before Sia is born, her parents will know how long will Sia live, a rough idea on her DNA and genome mapping. They will know what all diseases she will have and she will not have. They will know how her lifestyle would be. They will know what Sia should eat, Sia should not eat to live a healthy lifestyle. So they will already have that data as Sia is born, right? So for someone like us, if we go to Sia's parent and say, we want to sell you a health insurance or we want to sell you a life insurance, Sia's parent may choose or not choose to buy depending on the knowledge that they have for Sia. Right. Or they may say, you know what, we have looked at our medical records. We only want a cancer insurance. We don't want a health insurance. Right. Or we don't want life insurance because we already know that going by the genome theory, if Sia maintains a healthy lifestyle, she is likely to live anywhere between 75 to 85 years. So we don't need a life insurance. So the way the gene theory is developing, the way the science is advancing, we may not have a customer in Sia. So maybe we need to relook at our own products today, because what is working today will not work 25 years from now when Sia is 2025 and is a customer for Aviva Life Insurance to buy insurance in India. That is how the change is happening. So, just like camera industry did not face challenge from cameras, but mobiles to make them defunct. Similarly, in an insurance industry, whether it is health or general or life, the challenge is coming from outside. Look at driverless cars. If you have a driverless car where you are not going to drive, when you buy a new car, what is general insurance for? Now, do you buy a car insurance for the driver because you are not driving? Do you buy the car insurance for the car because the car is insured? Car already comes with a warranty with the company, which is saying there's nothing that can go wrong with the car. Or are you going to buy insurance for the person who's riding? So the whole dynamics of the industry will change with the technology. So just wanted to leave you with these two examples on how digital, AI, ML are becoming an integral part for us, not only on a customer service platform, on an integration platform, but also the impact on the products that we offer for our customers as we go forward. And I'm very conscious it's 6:50 and I will stop here, Dr. Chaudhary.
Thank you so much, Amit. Absolutely interesting and fascinating. I think the canvas that you have painted is, almost about few decades, and also few decades henceforth, with all the technology there. I think one of the curious questions that I like to start with, Amit, is about the, Aviva in London, where, the game, somebody has to download the game, and, therefore the next premium is going to be based on the, the driving skills. And what has been the actually experience for the company? That's one. And then what has been some sort of the feedback from the customers? I'm sure you must have had both sides, or maybe you must have had one side. Either way, so what must have been the feedback from the customers? How did they receive this one?
See, I think if we take the fun element out, Dr. Chaudhary, with family, I think the experience is the customers understand, that when we rate up their premium or rate down their premium, they absolutely understand the science of doing it. Why we have done it. I think it is great. Second is, there has been a lot of consciousness about driving safely.
Yes.
We all, when we know that someone is watching us, or our family is watching us, if I know that I have my friends and family who will see my rating and say, oh, how bad I am as a driver, I would want to improve, and that improvement in driving typically leads to a safer driving. So I think
Absolutely.
it's benefited both the organization, and it's also benefited the individual and the family, because you drive safe. You drive more consciously, and when you are safe for not only the family, you're also safe for the society at large. So it also has a little bit of a societal angle to it, which I wanted to bring.
Yeah, I think it's very interesting phenomena about behavioral economics, or let's say conditioning somebody's
Yeah.
behavior. Very good.
Yes.
We have quite a few questions from quite a few of our participants. Amit, with your permission, I'm just taking
Yes,
one by
please.
one. And this is a question from Suraj Mishra, and it's a fairly long question, but let me just read out for you. Hello, sir. Insurance does give a peace of mind once a while, but the real headaches come during the claim process, where generally the companies try to use the TNCs to reject the claim. Given that most of India does not read or do not read or understand the tiny wordings or understanding, is wording meaning is the fine print there. Understand the context or implication of those. What could be the measures to make it more transparent and beneficial for the general public, especially for laymen at large, so that the confidence and peace associated with remains intact? Thank you, Suraj. Very timely question.
Great question, Suraj. It's a great question. Let me tell you two parts. One, I think you're right. That's why I said you may not read the terms and policies of the document, but please do two things. One, when you fill up the form, fill it yourself and fill it right. If you have filled the right information and we have chosen to give you the insurance, there is no reason why we will not honor the claim. So if you are a smoker, if you have an issue, if you have a health issue, please, 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 please mention it. So I think that's important. Second is, when you get a policy pack, every insurer sends a one-pager, key benefits of the policy and the key characteristics. I think you should read that. That is important, because if that encaptures your understanding of the policy and what you are buying and what you need to do, I think that will be okay. I'm not saying don't read the whole policy document. Please read the whole policy document. But if you do these two things, you are 80% covered in what you have bought, what you will get at the end of it, and what you should have declared. I think that is very, very important. The third is, let me tell you, today all of us consciously work to enhance our claim process and the claim settlement ratio. There is a lot of drive from the regulator, like I said, on the customer. We'll give you our example. 6 years back, our claim settlement ratio was 85%. This year, we have ended March 2022 with a claim settlement ratio of 98.4%. So out of 100 claims that we get, we will settle 98.4 and pay them. So you can imagine how much the companies have also focused on selling right, doing right by the customer, and then settling the customers. I think it's been a journey. Don't worry too much. Buy insurance, understand what you have bought, and declare right. That's it.
Thank you so much. Very interesting. The next question is from Mr. Nikhil Gulati, and his question is how insurance tech things are working. There's a lot of inertia already to buy insurance, like ULIP, endowment, or in endowment policy, etc.
Well, I think from a product and an insurtech standpoint, like I said, I think insurtech is working in helping us simplify the process. It is helping us work in simplify the customer experience. That's where a lot of technology comes in. Helps in risk management, in fraud. Yes, from a product standpoint, the simple the products are, it's easier for the customer to understand, and also the buying experience. So today you can buy a car insurance online. I don't know any one of us who would have gone to a car insurance offline and bought. We would all buy online and pay online, right? Life insurance, you would still meet somebody because it's a little more complicated. But health insurance, you just go fill in the form. If you have nothing to declare, you get the policy, in document in half an hour. Yes, if you need medical, then there is assisted. Like I said, you then go off the process, get assisted. But I think it's that's where the technology is playing a part. If you ask me, my vision, and I keep challenging my customer service team, is just like we don't go to the bank, why should someone even want to walk into an insurance company's branch? I have branches, 60 branches, but why should you want to walk into a branch? You should be able to do all customer service via technology from the comfort of your living room couch or your bedroom or your workplace, wherever you may be, or in the car. And that is where you can buy an insurance. I think that's where technology is is evolving. My friend, you, the customer, are at the center of everything we do, and technology is helping us make you the queen or the king for us.
Hope that stays as that is. This is a question from Malati, and her question is very simple. What's the impact of COVID on insurance sector? Of course, she also had a very interesting perspective on the chat, Amit, and let me just read out that as well. What she's saying is that data science, that is A and ML, has played a major role in insurance sector. Thank you, Malati. So her question is
Yes,
the COVID and insurance sector.
I think it's a double-edged sword, Mal. Double-edged sword because it has helped people understand the importance of protection. India typically has been a market where people buy insurance to save money or create wealth. Like I said, protection was not that key. You would not, why should I pay 20,000 rupees for 20 years for a 1 crore cover, and if I don't die, it all goes waste. I think that mindset has changed. So protection has come into the focus, which will help to increase the penetration in the Indian market. I think that's been one good thing. The second thing that has happened is people are now not so easily giving up on letting their policies lapse. They understand that because of COVID claims, the policy rates have gone up, the charges have gone up, and I will explain that later why. Because those rates have gone up, you will not get the product at the cost that you were getting earlier. So it makes sense to continue and not buy newer products every 3 or 4 years with the same benefits. The third thing that you should continue with the product is because there is a legislation which says that if you have a product for the longer you have the product, the difficult it is for the insurance company to dispute your claim, because they have had that much of time to figure out whether you have done fraud or not. Answering to the first question that I think Suraj asked, the longer you keep the product, the more chances of your claim being settled are. I think that's very, very important. The angle that is there has been a lot of reinsurer resistance. There has been an impact on the reinsurers. Reinsurers are people who insure insurance companies' risk. So we insure your risk, they insure our risk, right? If they increase rates, then we have to increase rates for you. So the reinsurance rates have gone up. So we are paying more money to the reinsurers. Because we are paying more money to the insurers, we are charging higher money on our product. So the insurance rates have gone up. That's the other side of COVID, which people don't understand. But I think overall, it's been a balance there. So I hope I've answered your question.
Thank you, Amit. And this is a question from Mr. Ashish Moitra. And his question is, respected sir, insurance, contingency planning, including endowment and term planning, along with other insurance products, and stock markets, in the other hand, both are different verticals. Which one is giving more returns? Investing as an individual in personal insurance, as a forceful saving with different products of insurance company, or shares to be purchased of some insurance company?
I don't know what your risk profile is, my friend, who has asked that question. It depends on individual's risk profile. But let me give you an example on what is giving return. Today, I assume, you are healthy, you can buy stocks, and, you sell stocks and you earn money, and your family, you can have added income. God forbid something happens to you and you are not there. Your income is gone. Where is the money to buy the stocks? If you can't buy the stocks, you can't sell stocks. If you can't sell stocks, where is the return going to come from? At that time, your family will have 1 crore, 2 crore, 3 crores of insurance, or the money that you have given in an endowment plan, which will come to them, and then they can invest that money, they can use that money. So look at it from two different aspects. They are not the same. There is no comparison between return on equity and return on insurance, because they serve two different needs. Equity is wealth creation and wealth generation. Insurance gives you an option of protection and wealth generation, which is not there in equity. That's the difference.
Thank you, Amit. And the next question that we have is from Mr. Ravindra Kumar. And his question is, Mr. Amit, the general feeling is that the insurance companies use flimsy grounds to reject claims. Again, something to the claims, I think, but nevertheless, I'll just quickly read out if there is something else to be added. One of the main one is road accidents, where the company rejects saying, we cover the insurance only till 150cc bike, and the person is riding a 350cc bike. Your comments and what are the options for claimants, please? Thank you, Ravindra.
That's why I said, be very, very clear. Be very, very clear of what you are buying. If you have a 350cc bike, don't buy an insurance which covers 150cc. No. See, we all need to be very clear. See, it is our money. We are parting with our money for hedging our risk. So be clear, what are you spending your money on? I always believe in an old saying, trust in God, but lock your car. Trust in the agent, but understand what you are paying for. That is your responsibility.
Absolutely.
So understand what is it. Understand if something goes wrong. So, ask that question to the insurance. When the insurance company person calls you for a pre-sales call saying, sir, have you been told the benefits? Have you been told the key features? Don't say yes, 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 because you are busy in a meeting. Take 10 minutes and answer the question. When that person tells you, sir, your insurance is for 150cc bike. Your insurance is only till 11 o'clock in the night. If anything happens between 11 and 12, you will not get insurance. You will pay 10,000 rupees every year. Your insurance is, understand those questions before you say, yes, my friend. That is what is, because it is your money that you are spending. So trust in your agent, but understand why you're paying and what you're paying for.
Thank you, Ravi. Hope it was not your personal experience, Ravinder. Then if it is, I think we're extremely sorry for that. But nevertheless, the next question is from Mr. Mainak Mandal. And again, it has got to do with the settlement, but let me read out, Amit. When one insurance company declares claim settlement ratio, does it sum of acceptance and rejection together as settlement and only undefined case as non-settlement?
So there are three elements to it. There are the cases that you settle, the cases that you reject, and the cases that which are under process. Those are the only three. So when we say we are at 98.4% out of 100, then you can assume that we have settled 98.4% cases at the end of March. We may have 1% which we have not settled or declined, and there could be 0.6% which could be work in progress, which we have not been able to take a decision. I hope that clarifies.
Absolutely. This is a question from Anuj Kohli. And his question is, companies sell health plan and promote them for special features, then ask for add-on benefits. Is that does it mean base policy is not good and make better adding make it better by adding add-ons? Is it logical to go for add-ons? His second question is, I have a health plan purchased online, and from very next year, companies are pushing to add add-on options. Besides, increase the base premium by 10.5% approximately from second year. Is this increase mandated by IRD rule, or is it company's choice to increase any amount as per company's choice? Anish, thank you.
Anish, I'm not a health insurance expert, so I can't answer that question in detail with your policy. You will have to go back. But let me tell you, on the riders, there is always a base insurance plan, and there are riders. There are riders which bring on added benefits to the plan. So not all riders are bad. Let me tell you, some riders are also good because you get an additional cover for a nominal amount. If that would have been included in the policy, your premium may have gone up, say, by 20%. Here you are paying 10% to get that rider only for that. That is one. Second, rider gives you a choice. In life insurance policy also, we have riders. Someone takes a life cover with a cancer rider or with an accidental death rider. Those riders also help people, give them extra cover for things that the policy may not cover. So not all riders are bad. Some riders are good. So please assess what the rider is for. Is that some part included in the policy or not included in the policy? If not included, do a value. So ask a competitor. Today you have choice. Ask a competitor saying, if I take a health policy with, say, cancer, what is the premium? And if I take a health policy which is without cancer and I add cancer as a rider, what is the difference? And then do the mathematics. Right. So understand that. So not all riders are bad. As regards to the premium that has gone up, I'm not able to comment because I don't know the policy and and I don't know what they are asking for. And let me tell you, regulator does not mandate an increase in the premium unless it's part of the policy feature which would have been filed. The regulator is very clear on what has been filed, and regulator only does that. So please understand the policy from there. But let me tell you, and this is to everyone, all 60 odd people who are on the chat today, please understand. You are educated, you are very well read. Irrespective of what your background is, you can understand what you are paying your money for. So ask the right questions. Seek clarity. Do not be in a hurry to buy life insurance. Spend that 1 hour, 2 hour on medical insurance, car insurance, health insurance. When you buy, for example, when you buy a car insurance, ask that question saying, what if I hit somebody, I'm in an accident and somebody dies in the other car? What is my liability? Right. When you take a household insurance, make sure you include your maids. If a maid is working in your house and she gets an electric current, what happens? What is your liability? Ask all those questions. Research, research, research. There is so much data outside. Research and then buy. Just like, you would do for any other thing in life, just do that for insurance.
Absolutely, very interesting. The next question is from Mr. Kaushik. In fact, he has got two questions, Amit. Good evening, Malik. In digital era, how insurance companies are going to manage underwriting in efficient manner? How would it be dynamic? That's one. And his second question is how regulators are going to govern the new tech apps and new ways of underwriting risk and covering risk.
The first question I answered, Dr. Chaudhary, during my time. I've given an example of it. The second question, can you please repeat?
How regulators are going to govern the new tech apps and the new ways of underwriting risk and covering risk.
Let me tell you, I think Indian regulators, whether it is the banking regulator, the insurance regulator, I think there are some very, very intelligent and well-read people. Indian regulators are looked with a lot of respect in the countries outside of India. That they have all they call in experts, they have expertise. If they don't have, they call in experts, and they will understand what the insurance company is wanting to do, what are the underwriting mechanisms, and they are on top of it. So be rest assured that if someone is following the process, the regulator would have looked at it in their inspections and their product filings. They would have made sure that that is the right thing. And also, insurance regulator is a step ahead. They are already doing sandboxes. They are asking insurance companies for ideas of how you can take that next step forward, whether it is in underwriting, whether it is in claims, whether it is in fraud management, on technology and the test cases. So before it comes, there is a sandbox, there is a test case. We have to share the results with the insurer. Insurer then looks at the results, approves that data, then only it goes into a product for the customer. So be rest assured. Okay. Dr. Chaudhary, we are at 7 minutes past 7.
Yeah. Can I take one or two more questions?
Yeah, we will take two more questions, sir.
Great. So we have the next question, two questions, in fact, from Mr. Sunil Joshi. How the premium amount is linked with the claim ratio? How much premium goes up if you have claim in previous year? Any formula for it? That's one question from him. The second question is the digital data used by companies only to increase the premium of customer, finding newer ways to change more to customer?
So I think, sir, if your question was on the claims ratio for health and general insurance, I'm not the person. In life insurance, the premium is agreed upon at the term of the policy, and it remains the same for this. So if you buy a 20-year policy for a term plan, you will pay the same amount of money till the 20 years, or for the endowment, you will pay the same amount of money for the 20 years, so the premium doesn't change. So whatever is the premium at the start in a life insurance company, that is what it remains. So that's the first part. Second part is, it is that that the technology is not only used to rate up, it is also used to rate down. I think there are a lot of benefits of using that. It is not always that we would charge the higher premium only to rate up. I think that's a misconception. I think there are charges that are put there. And on your question of claims from general and health, I'm not the right person to share how the mechanics work of the no claim bonus and the claim bonus and how do they arrive at it. So not fair on me to comment on general insurance mechanics of how they do that.
The last question for today evening, Amit, with the permission, is from Bhumika Singh. Her question is, hello, sir. Thank you for the insightful session. My question is how the insurance companies deal with the competition, as people can nowadays compare the policies and other aspects on portal like policybazaar.com, etc. Thank you, Bhumika.
Great, Bhumika. Great question. I think we all welcome competition because we learn from each other. We put the customer at the center, and the competition drives us to do more for our customers by asking for less. So if there is a product in the market that the customer wants, it helps us understand trend. It helps us offer similar products, which is good for the customer. And I think it's a very, very healthy competition. We all watch what the competition is launching. We all watch the customer reaction. A lot of us also copy the products, which is fine, because if that is the need. I think competition is welcome in every sphere because it is good for the customer. And absolutely the customer should have a choice. I am all for saying give customer the choice, because a customer should have the choice to buy a policy from his or her company that he or she wants, and the product that he or she wants. The only thing that I ask of the customer is, please be aware and understand and compare. You would have heard me saying earlier also, research, compare, right? And then take a call. So if someone tells you X insurance company is good, buy. Don't listen to that. Go research that company. Look at their claim ratio. Look at their products. Look at what they are offering. Look at what premium you are paying, and then compare it with someone else. Do 2 or 3 comparisons. Yeah, don't go and compare 24 products or 24 companies. That's not going to help. But do compare 2 or 3 key products. Research and say, if I want to have a child plan, which are the top companies in the child plan? Look at the 4 top companies. Compare, and then buy. So I think the more the competition, the better it is for the customer. Anything that is good for the customer in the end is always good for the industry.
Thank you so much, Amit. I think, sorry, we have extended almost by 10 minutes. Absolutely. And of course, we have to leave a lot of our questions on, but I think some of them were already answered in your talk. But on behalf of all of us at TPL, TSW, and on behalf of all of our participants, Amit, thank you so much. I think, I think the word insurance is a very dreadful word, just the word, right? Like you rightly said, right from the time, the way we have inherited, a lot of things, from parents. But one of the things, like you opened the session with that, financial planning kind of thing. I think that's where I think definitely this will play a great role. But thanks to people like you, I think you're taking, these efforts to such a, I think you're actually democratizing these efforts. I think people are, the entire financial planning, definitely insurance planning is one such a platform. But I think thank you so much for giving us insights, as well as I think one of the most important thing again is how the tech is driving insurance penetration, given the densities that we have in India. Because definitely, I think quite a few things are, like you rightly said, type 3, type 4, type 5 cities kind of thing, where people are just asking for 1 rupee premium pay every day kind of thing. Now, how does it add up to the larger economics of the insurance industry kind of thing? But I think thanks to, like you rightly said, about the kind of technology intervention that are happening across the country, and also thanks to the IRDA and all the regulators interventions as well. I think largely there is always a misnomer about the kind of regulatory aspect that we have in India. But I think coming from somebody like you, the CEO of a wonderful insurance company itself, I think that puts at rest a lot of such suspicions or doubts kind of thing. But thank you so much, Amit. Wonderful having you. And once again, sorry for overshooting your time.
No. It's been a pleasure, Dr. Chaudhary. Thank you for giving me the opportunity. Thank you for your participants who've taken time out on their Saturday evening. And anyone whose question I've not answered, you can go on the LinkedIn. You can follow me on LinkedIn. You can ask me a question there. I'm also there on Twitter at Amit Malik 99. I tweet a lot. And I'm there on LinkedIn, more than happy to connect up and answer the question any which ways. Namaste, thank you. And again, I will say, if you have not bought an insurance, buy an insurance. I don't care whether it is from Aviva or anybody else, but do buy an insurance. That is important for your family and for your own health and safety. Take care.
Thank you so much, Amit. Thank you so much. Thanks.